Record this banger.
Hey, what's up, you guys? Welcome back to another video of The Common Investor. We're going to go into another deep dive of one of our portfolios. Today, we're going to go through Rosso's portfolio.
Dive deep into those REITs.
That's all I got. So, Rosso, kick us off. What do you got working for you here?
All right. So this is my portfolio here. As you can see, I have a heavy investment in Microsoft, nice blue chip. And then the majority of my other stocks are, I would say, energy focused. We have some travels, and then 12% makes up some REITs. And yeah, that's the overwhelming majority of my portfolio. So,
all right.
take it away.
Before we get started, which ones are REITs? And then explain to the viewers what a REIT is.
So the REITs are up here in the top left. So it's two RWT and then NRZ. And so REITs are real estate investment trusts. So basically,
Forgot about VTR.
And VTR, yeah. So they real estate investment trusts, they basically are firms that invest in real estate. So it's essentially like there's different types. Like you can have like hospital, commercial, residential, and these firms like invest in the real estate. So it's essentially like owning that property without actually owning that property, and they invest all this money, right? And then they pay a very high dividend off the income that they generate.
Isn't it like 90% of their revenue?
90% of their
Yeah, it's something really high. And so the reason that I actually invested in them, and I didn't know anything about them before, and to be honest with you, I don't really know anything about these companies, and it's wrong of me for sure, but like there was big news and they got cut because their dividends were cut. So people are like, oh, we're going to get out of real estate. But to me, I saw it as a good opportunity because, you look at 2008 and housing market crash, right? People started selling all their houses and whatever and taking their money out when the market was low. And people that bought in 2008 made a ton of money because the market recovered. And I see that as a similar situation here, right? Is where people can't afford to pay their mortgages. They can't afford to pay rent, whatever the case may be. Stock prices are falling. Dividends are being cut to save money to keep their businesses afloat. People get scared. And then I'm like, oh, okay, this would be a good chance to – I think these REITs are a good long-term play for sure. And, I think as I bought most of them were trading at somewhere around like probably $13 to $15. And I bought them around $5. So, looking at close to like a $300 return or 300% return. And then once they get back on their feet, the dividend will increase too. So, yeah, I think that those are definitely a long-term play for me. Hold them for sure.
How long are you going to hold them? Like
I'm gonna hold them. I think it's one of those things where I'm just gonna not check them every day because they fluctuate every day, right? And they barely go up because they're so cheap right now. There hasn't really been any good news to the market to react to. So I think, who knows how long it'll take to recover. I don't know how long 2008 took to recover, maybe a year, 2 years, couple years, whatever it is. We'll play it by ear, but as long as I can, generate a little cash flow, passive income from these dividends, I think that'll help to reinvest. So however long it takes.
So I just want to point out that 22% of your portfolio is an extremely risky plays due to COVID. I mean, you got 12%. Well, let me do the real math. You've got 16% in REITs, and you've got 10% in cruise lines. So that's 26% of your portfolio is rather risky.
Well, I would say is there real risk? Like maybe these particular companies, these particular REITs, maybe, but like I think as a whole industry, like they're not going anywhere. Like people are always going to need.
Well, yeah, they're not going anywhere, but you just got to hope that your REIT isn't the one that goes under.
Did you buy a REIT ETF then?
No, I did not buy an ETF. A REIT.
Should you do that then?
Should I?
I mean, if you think it's the industry, but you're not sure about the companies, should you instead buy into a REIT ETF? That way you're exposed to all of them, and then you're not overexposed in a specific.
Yeah, I mean, I think that would fair. Diversify my risk a lot.
The one that I really like is Veritas VTR. that one's a good one to keep, I think. Isn't RWT generally a really good one too?
Yeah, I think we talked about that before. I think we both
Yeah.
liked that one.
I think we liked RWT, and then NRZ and 2 were kind of a little bit shakier. But I mean, you've got a young portfolio. If you do see those 300% returns, then more power to you. Just like you saw your over 110% return on Royal Caribbean now.
Yeah, I have.
You definitely got a way riskier portfolio. But if it works out for you, then I mean, more power to you.
Yeah, I think a lot of it is definitely speculative and risky. But
And you're definitely gonna need those 300% returns once Carnival Cruise Line shuts down. Especially with that being 6% of your portfolio.
And
The
then,
sellers won't let it happen. No, they'll keep it afloat.
People are actually getting really mad if they get bailed out. People are gonna be very mad if Carnival gets bailed out.
they won't get bailed out because they're not an American company.
Yeah, like it's like there's a heavy anti-Carnival bailout going right now.
Saudi Arabia injected a lot of money into Carnival.
Yeah, but
That's not a bailout though.
that's just like
kind of saving Carnival.
that was just like as an investor though.
Yeah,
That's as an
a lot
investment.
of money, so they're kind of like they're gonna be all right.
I
I
see
think
Carnival as definitely as like a common investor play. Like I think anyone who's like our age right now that's like, oh, what's investing? Like how do I get into it? And they see all these big YouTubers and stuff talking about Carnival. Like these are the people right now that are putting money in, and they're like, oh, like I know Carnival's a company. They have a good reputation. Like
You know what I like more than Carnival though? And if you want to go to the travel and tourism stocks, I like Southwest and I like Delta. I think airlines are a lot more necessary, whereas with cruise lines, I mean, people are only cruising if they have expendable income. Not many people have expendable income right now. Not many people are very confident with this entire crisis going on, this whole pandemic. I think you're going to see, I mean, even the airlines industry is talking about a few years, 3-4 years, before even seeing airline traffic return to what it was in 2019. If you think cruise lines are going to reach that point before airlines do, I think you are not really thinking smartly.
But if
we
he's
don't
doing
even-
it as a long-term investment, then I mean, it's whatever. I mean, if it's going to return at some point, it doesn't have to be just a short-term because they're not doing it now. I mean, I'd argue that right now would be the best time to get in because it's the most fear around these stocks, and that's what's tanking them because there's.
Is there fear that people might not return to cruises? I mean, you've already.
there's no way. There's no people live for this all you can drink.
So.
Which brings us
Corona because of the coronavirus.
Which brings us to something actually Constellation Brands is raised, so that's false.
Carnival dropped like 90%. That's way too much.
But it brings the question.
But I mean, like
about the consumer base for those. I mean, we've talked about it before. That I mean, I've called it myself. I've called Carnival and the people that take cruises cult-like because if you give them a free bottle of champagne and an upgrade on the room, they will go get exposed to COVID just to be on the boat. But
People that go on cruises will keep going.
Are we gonna see old people take a step back from going on cruises though?
Good point.
Don't even believe in
That is a big majority of the people. Retirees are a big part of.
Have you been on a cruise? Have you seen those casinos?
Yeah.
It is like 4 o'clock at a Denny's.
It's going
early bird special. No, even better.
And the other
3:30 at a
people are
Cracker Barrel.
Families, and I mean, like a lot of people are out of work right now, furloughing their rent or mortgages, and then they're gonna come back and not really have a lot of expendable income. So even if the cruises do come back in the next, they start cruising by the end of the year this year, you're not gonna see as much volume, and that's just like my opinion. But I mean,
all right. I think we've talked about this. I think it's time to move on to his bigger positions.
Schrodinger.
Yeah. So this is a
new IPO.
New IPO. Yeah, they came about in early February, and I saw them, and I just like their idea. So they are. I'm going to read it here. So they provide chemical simulation software in pharmaceutical industry. So the way I think of it is this company can come up with some solution to some, pharmaceutical issue, people are going to love that, and it could have a huge impact in society. And I think, especially with, the way healthcare and stuff is changing and all these new drug discoveries are coming out, even with COVID too, like this could relate to them if they are looking into that. I bought them on the chase. I bought them up at nearly a 52-week high, like their highest point. And then they dropped down, but now I'm about to break even. I think I'm only down 5.5%. So not too bad.
Schrodinger is something that we both talked about and we both liked from the beginning. I personally, we've seen very successful systems as a service companies on IPO. They do a lot better than consumer based, as shown by Schrodinger rising versus some small direct club and some Casper falling. Because if you don't get that consumer base, you can't really justify your price. Or Schrodinger systems as a service, software as a service, they're kind of using their advanced technology to expedite drug trials and expedite the creation of drugs. So I definitely like Schrodinger there. I don't think that where you are right now is a bad position. I'm very bullish on them for years to come. I just like the general outlook of the company. So definitely like that.
I definitely like the fundamental ideas of Schrodinger. I don't know like anything about I haven't looked at.
It's an IPO, right? It's hard to know like what they are.
It's always a crapshoot the first year. You just gotta like the idea and go with it.
Yeah.
It's definitely it's like
Eric,
the idea of the company for sure.
Uber, Jesus.
Although
less than a year ago, still.
What?
Yeah, only a couple months ago.
Yeah, but Uber sucks. And if you bring up Uber one more time, you're kicked from the group, and I'm taking over your YouTube channel.
Oh my gosh!
Let's talk about Big Daddy Enphase.
Oh man, this is I've liked this for a long time.
We love Enphase.
We love Enphase. So this is a solar company. They based out in California, working on some microinverters, batteries, things of that nature. And they're just a sound company, man. Haven't heard a bad thing about them. A lot of growth, very stable. And I've made I'm up 72%, and that's after they went up. So they were trading when I bought them. Let me see what I had. I bought them initially at $27. They went up to $60. I sold half my shares. They fell because of COVID, came back up, and I'm already up 72% again. So very good company.
I think Enf is great as an alternative energy. When they were dropping again and you wanted to buy back in after selling those shares, do you remember what price I told you?
Wasn't it like 28?
No. The first price.
I don't remember.
It was sitting around $48, and I told you if you wanted to buy back in, my buyback in point would be $40. They're above that again very quickly, very quickly. They were not below it for very long.
What are they at now?
They're above 40.
50.75 right now. They went up 14% today.
Yeah, I mean, and if you're talking about people having a lack of money, the best thing about solar energy, solar roofs are actually a lot, like having solar panels on your roof is actually a lot better for your roof, as weird as that might sound. But it's actually
a buddy of mine was actually telling me that he has a solar panel and that he's getting he's getting like a tax credit for having the solar panel.
And they're doing that in California now, right?
Yeah.
Actually, some companies will buy your extra energy back that you.
I watched a bunch of videos, and it's really, you shouldn't take in more solar energy, because what they pay you back at isn't worth it.
What do you mean?
Like, you want to be able to pay like a small amount of your electric bill as possible, because that's the best bang for your buck. If they're paying you back, it's not worth it for your investment. I watch way too many.
Why wouldn't you want them paying you back though?
Because they pay you back like nothing.
Because for what you're producing,
Yeah.
you're producing,
it costs more to produce than what they pay.
Oh,
they
really?
pay you.
yeah. But I mean,
lowering your electric bill, it's worth it. But
I mean, yeah. I mean, I went to an environmental school. I really like alternative energy solutions. I like
Tell you what, a stock that is very good in alternative energy.
Bam.
No. Renewable Partners. They're like the largest company in the world for hydroelectric.
Okay, but we're talking about Enphase right now.
I mean,
so keep your Brookfield out of here.
Brookfield's larger than Enphase.
No, but what you don't realize about Enphase is they literally just got a contract in, what was it, Netherlands, Rosso? For a large solar farm. They're partnering with someone for it. They posted insane earnings. Their growth is like astronomical. I really think they're going to be a big deal. When you first showed me the stock, Rosso, I loved them. So,
they have the weirdest stock. They have like a U. It's literally like
they probably don't list it, but they probably had a split, is what my guess is.
Yeah,
I know there was an article about it, but I didn't read it.
And they were up at like 35 before, and they went down to like $17.
Dude,
so I sold Enf too early. I sold it for a slight profit because I'm an idiot and I still had my day trading brain on. So I tried to get back. I wanted to get back into them, and every single day they would just go up and up and up. And I was like, I'm gonna wait for them to slice in half to 17. Well, when they dropped down to $21 on March 23rd, I still didn't know what I wanted to do with my money. So guess who didn't get into Enphase at $21? This idiot. But I really like them. I definitely think them being 18% of your portfolio is a very good move.
Oh, I just read an article. Enphase Energy shares up 14% because they're moving to the S&P mid cap 400. So they're going to get a lot more institutional investors.
Yeah, they're insane. They're so good.
They're going to be making some moves. So
yeah, they're absolutely crazy.
It's huge. It's huge, boys. And then we, obviously we have Microsoft Blue Chip. Yeah. I got them at one on the dip at Corona. I got them at 144.
That's like the best price. That's like one of the best prices you could have got them at.
Again, I'm an idiot. I'm sitting there like, I'm gonna get Microsoft at 120. I'm gonna be the smartest person ever on Wall Street. Whoever's not buying Microsoft never went to 120. I never bought them. They went down to like 133. And then like a week later, they were like 160, and I just wanted to quit. Mad.
I don't know what's that. I had them at $94 before.
I had them at like 160,
28.
And then when they were at 190, I thought they were overpriced, so I sold them. And then this whole COVID thing happened, so I never got back into them.
Yeah, 2018 February, I had them at 94.
I was in them too initially, and I sold them like an idiot. Let's see, I was in at initially 2019. I was in them at 129, and I sold them.
I think Jesse's in them at $15.
Yeah.
Yeah. Jesse has, when his grandpa bought him shares, like 15 years ago, something like that, 20 years ago, at $15 a share, bought him $500 worth. So,
oh God! All right.
Yeah. And he doesn't even know he's like, I don't even know how to check them. I was like, dude, get that in order. Those are like
gold. He doesn't know how to check his 401k.
Yeah, I mean, we're not going to talk about Jesse on here, but yeah, he's got insane position in Microsoft.
I think Microsoft's a good pick as one of your biggest holdings. Got a good blue chip in there.
Is that Marathon Oil at?
He got it for free because he uses
stock.
Why did you even put that in their portfolio?
It's part of my portfolio. It's 0.2%. Guys, I'm up. Listen, free stock.
I'm up 30 cents on it.
Get your free stock. Robinhood link.
I'm up 17% on them.
Get your free stock. Luke is plugging his Robinhood.
Shameless plug. Get your free stock. It's the link in the description. Robinhood.
All right. I think we
I think we covered it all here. So nice portfolio, Rosso. Glad you're kind of, learning the ropes here. I know you're the newer guy, so like that you're getting your toes wet. So I think that's going to be it for today's
He's literally
video.
getting his toes wet. He's in cruises.
Diving in.
10%.
Well, we'll end that there. Thanks for stopping by, and look forward to the next video, guys. Thanks.